call a spade a spade. The end of 2023, kind of beginning of the year here, hey, we're gonna drop interest rates, give or take, they say 4 times, they maybe said 6, they say 3, they've gone back and forth. It really hasn't happened yet. As a matter of fact, rates have gone up a little bit. They're saying, hey, things are looking good. We're heading in the right way. There's been some progress, but it's not at the point where they're gonna start dropping rates. So currently that rates, when I say rates, we're talking about interest rates of basically from 5.25 to 5.5. That's the range we're ballparking right now pertaining to what the feds are saying. How does that affect you? A lot of times with you clients out there who we're meeting with, and you're meeting with advisors, you're meeting with myself, other advisors here with the team, we're talking about money markets. We're talking about CDs, high yield savings accounts, investments that don't have risk, that give you a fixed rate, based on these interest rates. So now let's kind of dive into what they were saying, and the old chairman there, Mr. Jerome Powell of the Federal Reserve, he says, listen, we're going to keep it level. Now, when they said in December of 2023, they said, hey, listen, we're going to drop interest rates 4 times, and it hasn't happened. It's happened before. But all that let us know is, good, bad, and different is a lot of these political situations, whether it's a Democrat or Republican, they always are going to be putting, pressure on the feds to drop rates because it usually will help out bonds. It'll usually, free up spending, stimulate the economy at some point. So when you hear people say, oh, they're dropping interest rates, usually that's a positive for the market overall, bonds and stocks, equities, and again, freeing up people to go take loans out because they pay less interest on it. So where can these rates staying level and or if they get increased hurt you? Well, your mortgage. If you're getting a brand new mortgage, rates are a little bit higher than they historically have. If you're getting an auto loan, if you have credit cards, you really want to pay attention to that because we know those are some of the worst interest rates you can get. So make sure you're aware of what that debt looks like and how these interest rates affect it. One of the things that I thought was a good piece of information when Mr. Powell says, hey, things are making progress and it looks positive, and they have said they want the goal to get back down to around 2%, which is a pretty big, lofty goal. I don't know how reasonable that is in a short period of time. But it all stems back to unemployment numbers, right? What these different leading indicators are doing. So they're basically saying, hey, things are making progress. We see positive indication from the economy, but we're just not at a place where we can actually start slashing rates. So, keep in tune with this. We're going to be constantly putting information out, but we want to give you a quick update. Again, the feds meet. We're going to keep interest rates level. So we're still getting those nice money market numbers. We're still getting decent CDs, fixed annuities. The rates look good, but just make sure you're keeping an eye on that stuff because if they start dropping rates, that's an opportunity where you start maybe looking at, hey, maybe there's some bonds that might make sense, right? Because just to kind of reflect on this, when interest rates go up, bond values will go down, vice versa. When interest rates go down, bond values will go up. So make sure you understand that relationship and why it matters. But again, if they start dropping interest rates, it's going to help your credit cards. It's going to help the ability to get a cheaper loan on your house or your car. So that's why we watch it so close. It has a lot of leading indicators along with interest rates and unemployment and all this good stuff that we're looking at on a daily, weekly basis. So I want to make sure we gave you a quick update. Hopefully this is helpful. One thing that is vital and very important, if you're sitting here watching this and you're thinking, you know what, I got questions about my stuff. Whether you are a client or somebody just in the community who loves watching our educational stuff, please reach out to us. That's what we're here for, and we'll get back to you and have one of our professionals touch base with you. So I hope you enjoyed this little version here of Ask Alex, and we're talking about those interest rates and the Fed meeting this week. So I want to make sure we keep you posted, but again, can't say it enough. Hopefully you and your family have an absolutely wonderful Father's Day this weekend. God bless you, and please let us know if we can help you or you need anything. Thanks so much.